Namaskar, namaskar, everyone. What's up? Hope you guys doing fantastic. If you're joining live for the first time, my name is Aditya Soma, and I do these lives every week on Thursday, 7 p.m. Usually, sometimes I come alone, sometimes I come with a special guest. So uh, just this channel where I talk a lot about real estate, financial freedom, achieving financial freedom through real estate, and about Windsor market, cash flow, bird strategies, joint ventures, and a lot of other topics. So if you're interested in those topics, don't forget to join us live every Thursday 7 p.m. And don't forget to hit the subscribe button and the like button. So today, without any ado, I would like to introduce you guys to my mentor, whom I when I started, like when I was a brand new, like literally I didn't even purchase any properties at that time, and I was looking to learn about how I can find money from other people and do deals, because at that time I didn't had money. So that's when I found Dave, you know great mentor, and I learned a lot of things. And after that, trust me, I have done like a lot of JVs. Now when someone talks about JV, it's not new thing, but when I was brand new, it was a lot of new things. So thanks to Dave for that knowledge. And today, it's a humble, it's honor to have you here. So
Well,
Dave,
thank you very
welcome to
much,
my.
Aditya. You know what? I remember that event where you and your lovely wife came, and I can remember you guys were so keen to get started with real estate investing. And after teaching and training thousands of people, there aren't very many people that I remember distinctly, but I do remember you guys. And I can remember thinking, I think they're going to make it. But I had no idea how well you were going to do. So now it's my turn to humbly congratulate you on everything that you've done, all the hard work you've put in, everything that you've accomplished in a relatively very short period of time. That is fantastic. You are truly an inspiration.
Thank
So
you.
keep
Thank
doing
you.
what you're doing, my friend. It's wonderful.
Thank you so much, Dev. Yeah, again, that the one of the reason why I wanted to have you, right? Like, there are a lot of new people like me, like, who are just getting into real estate, who don't have money or not that much money, or maybe a little bit money, where, they know they could do a lot of deals
Yeah.
like me. And like you said, short period, right? Like one of the reason for achieving it in a short period is the joint ventures. Like I have only few properties that are my own. Rest everything were JVs.
Hmm.
So, and I haven't talked much about this thing on my channel so far, because I was not an expert. I just learned from experts. So I thought, you spread some love, or some sunshine on this topic, for newbies like me. Is it really doable, like JVs, for someone who is just starting out, maybe own one property or nothing?
Yeah. Well, that's a really good point, Aditya. It's easier if you've got at least one successful deal under your belt already. So I'm not sure how you did it, Aditya, if you self financed your first deal or two and then started finding JV partners, or if you found JV partners right from the very beginning. But to be perfectly frank with you, is it doable without any experience? Yes, it is possible. Is it easier with experience? Yes, it's much easier. But here's the good news: you don't need to have a lot of experience to make it easier. Even one deal is all that's necessary, because here's the statistic that I've heard, and I repeat it often. I hope it's accurate. You've heard what they say about statistics, right? But 95% of the general population has never invested in a revenue property.
Wow.
Their own house does not count as a revenue property. I'm talking about, Robert
That's a
Kiyosaki, Rich
huge
Dad,
number.
Poor Dad, that idea of revenue property, an asset that's generating you income. So if you even have one successful revenue property deal under your belt for experience, then you are probably ahead of 95% of the non-real estate people that you know. So here's the challenge, Aditya. You and I, we hang around with a lot of other real estate entrepreneurs. So we're accustomed to hearing about people who have hundreds of doors or thousands of doors, or they do this volume of flips or whatever.
Yeah.
but most people have never even done one. So that's all it takes. That's all it takes. Now, is it possible to raise capital without any direct experience? Yes, it is, but it's more difficult. And I've got some suggestions if you're looking for
Mhm.
suggestions for people.
Yeah.
So if you're brand new and you haven't done a deal yet, and you want to start raising capital and you want to get into real estate investing, a couple of options for you. Well, first of all, get educated. That's what you guys did, Aditya. You went
Yeah.
out, you got educated, you learned, you absorbed like sponges as much as humanly possible, as quickly as possible. So
Yeah.
you at least have to have some education under your belt, right? You got to know a couple of things. You got to know what kind of strategy you're going to be focusing on and what market you're going to be focusing on, and laser focus in on those two things. So you have to become very, very well educated about that. Now, if you have the money to do your first deal on your own, then I recommend that you self-finance your first deal, because you're going to pay very, very close attention to that, because you've got financial skin in the game,
Yeah,
right?
I
That's
totally agree. Again, that's how I started too, right? Like my first property was like 5% down
yeah.
on a 120,000 property.
Good luck
So,
finding one of those today, huh?
but you can still find like for 300, 400,000
Yeah,
deals still, which is still like 20,000 if it's a 5% down, right? Like
exactly, right?
owner occupied.
Now, here's the other thing. If you aren't quite ready to jump in and do the whole deal on your own, then another opportunity is for you to partner with somebody who is already doing the kind of deals that you want to do in the market that you want to invest in. They've already got the experience, they've got the track record, and you will, what I call, pay to play. So you invest in their deal, you partner with them, perhaps you put in the capital, they put in the work, but part of the deal is that you get to ride along with them and learn as you go. You're not just going to be a passive investor, you're going to be an active investor. Does that make sense, Aditya?
Yeah,
So
that totally makes sense.
so again, I know before the pandemic, you guys had a wonderful club that you had meetups, you had
Yeah.
in-person gatherings, all that kind of stuff. So as soon as we can do that again, make sure you're attending those kind of meetings, mix and mingle, meet with people. That's the ideal place to meet folks that you can do this with, and
Yeah.
a lot of them be happy to do that with you.
Yeah, love it. Again, that's how I was doing. So, before I start asking you questions,
Sure.
first of all, I want to say hi to everyone who joined the live. Guys, don't hesitate. Here, I have my mentor who taught me about joint ventures. So please don't hesitate to ask questions, because you don't find, people like Dave their time to get your questions answered. So make sure you utilize this time to and get your questions answered. So don't hesitate to leave in the comments what's your questions, any questions around joint venture or investing, real estate, all those things. So
Or raising
don't hesitate
capital. Yeah,
raising
exactly.
capital.
Yes.
So Dave, before we dive into it, who are you? I know about you, but I just want to let people know who are you, because I would love to hear from your voice.
Yeah, well, I am a real estate entrepreneur based in Kamloops, British Columbia, Canada. I've been doing real estate investing one way or another since about 2001. I actually lived overseas for a number of years. So I spent uh, almost 13 years in Latin America. I lived for 10 years in Costa Rica. That's actually where I first dabbled in real estate, was with a couple of what we would call pre-foreclosure deals in San Jose, Costa Rica, way back in the day. Um, Moved back to Canada with my Costa Rican family in 2003. And I had to start all over again from scratch. Again, this is why I have such an affinity for first generation Canadians like yourself, Aditya, who come to this country without very much, because I can relate. That's how I went to Costa Rica, and then that's kind of how I came back to Canada as well, because I had a business in Costa Rica, I hadn't been able to sell it, so I didn't have much capital to start with. I had been self-employed for so long, I was pretty much unemployable, and I had to figure out what I was going to do. So when I came to Canada, I saw one of those late night infomercials that said, you too can get rich in real estate with little or no money down. I said, perfect. That's what I've got, little or no money. So I sent away for the course and I put it into use. And I did 18 deals in 18 months in and around Kamloops, which sounds very impressive, but some of those deals were pretty crappy little mobile homes and mobile home park type deals and things like that. But I got pretty good at finding motivated sellers and doing creative type deals. I took a few years off from real estate investing, active real estate investing, helped a real estate guru here grow his company for a few years. Then I jumped back in 2010. And this is when I started raising capital because I started doing a strategy that required me to go buy houses because I was doing a rent to own kind of a strategy. So I'd buy a house, rent own it to a tenant buyer for 2 or 3 years, help them get qualified for financing, sell it to them for a profit. So I self-financed my first couple of those properties, ran out of cash, ran out of credit. And that's when I started having to figure out how to raise capital. I made a lot of really dumb mistakes before I came up with what I call my process here that you learned at that event a few years ago. So that's how I got into it. And then more recently, the last number of years, I've become more of a passive investor, focusing on multifamily investments, more on the back end as a passive investor myself. There you go. That was a long answer for a short.
Yeah, no. Again, there are a lot of things that we can learn from that story, right? Like, first of all, that's a very big challenge that a lot of people having is like, being a self-employed, getting financing, that's a time where you have to look into the JVs. So what you have done is pretty smart. Like, now instead of like saying, giving up like many people, hey, maybe the real estate is not for me, let me focus on my business. Instead, you went and raised the capital, right? So again, that's where a lot of questions come in. So let's take the first question here from Profo. Hey, Dave and Aditya, good evening. How do you find a deal? How do you even evaluate if it's a good deal when you're raising capital from others?
Well, he's got 2 questions there, it looks like. So how do you find a deal and evaluate if it's a good deal? Praful, that's a whole seminar in and of itself. As far as how to find a good deal, a couple of suggestions. Number 1, connect with a smart guy like your host here, Aditya, who's got his thumb on the local market. If you happen to be in Windsor, right? That just makes sense because he's not just a realtor, but he's also an investor. So that's key. So anytime you can work with a realtor who also is an investor, that is gold, because most realtors are not investors themselves. They're very good at helping, mom and pop home buyers buy and sell their homes. They're not very good at working with investors to find good deals. So that would be my recommendation. Number 1, get yourself a good realtor. Number 2 is, in addition to that, you need to go out and you need to drum up some business for yourself. So what I got good at way back in the day was doing direct mail and doing direct outreach and doing a lot of the stuff that people are too shy to do, like having I buy houses all over the side of my minivan, things like that, having obnoxious business cards that say I buy houses all over the place, getting them out all over the place. So those are some tips for how you can get the deals. How to evaluate the deal, that's beyond the scope of our conversation here today. You need to actually take some training on that. What would you say to that, Aditya?
Yeah, again, that's I agree with you. So there are many ways to find a good deal, right? Like, like you said, realtor is one of the resource, and those running ads or looking on Kijiji, home buyers, and running mails, some Facebook ads there, and connecting to local investors, like you said in the beginning, meeting in the networking groups, because you have to be active in order to get deals to you. So for sure, and one thing I would add on to, like, how do I raise capital from others, right? Like, so now if you have a good deal, it's not that hard. Like, you just go probably ask your first, like, your friends and family and circle, right? But the question comes in here for you, now I have this deal, it makes sense, I know the deal makes sense, but how do I present to my family? Like, what kind of splits do I do?
Mm.
Um, First of all, like what do I even ask them to do JV? Because maybe I only did one deal or two deals. I don't know too much more than that. I know this deal is good.
Well, let me tell you a story. So, my philosophy is different than the common knowledge or the common wisdom that's out there, because a lot of people say, hey, find a good deal and the money will find you. And
Mhm.
I say that's very, very dangerous, because the challenge is, when I was in that situation, I had a really good deal, and I'd heard all about this. The money will find you, but I knew I needed to do something. So I did just what you're talking about there, Aditya.
Mhm.
I picked up the phone. I started calling people, which is called cold calling or dialing for dollars. That didn't work very well for me. Got rejected a bunch. It was no fun.
Mhm.
I went out and I was part of a bunch of associations, BNI, Toastmasters, et cetera, et cetera. And I did my elevator pitch and I networked and I schmoozed. That didn't work very well for me, because people are, here's what happened. Because I had the deal on the go and I didn't have the money for it, I was desperate. And it didn't really matter how good the deal was, that desperation kind of oozed out of me. And that's a turn off for a lot of people. So here's my suggestion instead. So if you're open to this suggestion, it is raise the capital first, get your investors lined up first, and then go looking for deals, right? Because then when you come up with a good opportunity, you're going to be able to jump on that deal quickly, because you've got the confidence that you've got the capital to do the deal. So, chicken and the egg, the deal
Mhm.
or the money, I say the money comes first, then go looking for the deal.
So what do I tell to raise the money, right? Like, so honestly, I love the idea because now if I have the money ready, it's easy for me to make the offers because I know I can afford it. If I
Yeah.
it's
So
it's
how do you get that money lined up
Yeah,
first?
because that's a question, right? Like that's a
Well,
million-dollar question.
that's what I've got this whole formula for. So if you'd like, Aditya, I'm happy to kind of walk people through big
Yeah,
picture
love to, please.
of
Yeah.
yeah, for sure. So here's what I'm going to suggest for your viewers. Number one is we need to create a target group of potential investors. Create a group of people that we're going to laser focus on as our potential investors. And when we're working with our clients one on one, we help them come up with a list of about 200 people that they already have a pre existing relationship with. Because here's the big issue I see a lot of newbie capital raisers having, Aditya, and that is that they run out and they start talking to everybody and anybody about their deals. They post about it, about raising capital on social media. They do all that. They go out to everybody in the world, right? And that's a challenge for two reasons. Number one, think about it. If you're trying to get an investor to come on board and invest $100,000 with you, which these days would be kind of the minimum to do anything, right? Probably about 100,000. Then that person's going to need to know you and like you and trust you. If you're going out to a complete stranger, they don't know you, they don't like you, and they certainly do not trust you with their $100,000. Would that be fair?
Yep.
Yeah.
Totally
So
fair.
that's very difficult to do. And the
Yep.
second challenge is this securities commission issue. So in Ontario and BC and in every province in Canada, each province has a regulatory authority that governs investing. So you got the Ontario Securities Commission, right? They're not very nice. And their job is to protect the public against unscrupulous people, con artists, to prevent little old ladies from losing all their money, which we hear about these people in scams and stuff all the time, right? So here's the challenge. If you and I, as a regular real estate investor, are trying to raise capital from the general public, we're actually breaking the law. If you don't have a securities license, if you're not a financial planner, perhaps a mortgage broker, a, a a professional trader kind of thing, if you don't have a designation like that, a license to do so, you could actually be breaking the law by trying to raise capital from the general public. So those are the two issues. Number one is logic. In order for somebody to invest with you, they need to know you, like you, and trust you. Number two is legalities. You don't want to cross the line with the Securities Commission. Does that make sense? So number one, we've got to focus on people that we have a pre-existing relationship with, friends, family members, co-workers, business associates, people who you know and who know you. Because here's the thing, there's a couple of areas that we can work in with raising capital, and that is one of those areas. So does that make sense, Aditya?
Yeah.
Let's start with a target group of a couple of hundred of those people, and those are the people that we're going to really, really focus in on. We don't need 200 investors. Chances are you probably only need 2 or 3 investors to do all the deals you want to do in the next year, and then maybe add a few more after that. So let's focus on those people, and then let's get started on the right foot. So it would be kind of strange if an old friend of yours called you up that you haven't heard from in years and said, "Hey, Aditya, I've got this amazing investment opportunity. I need 100 grand. Can you get it for me?" Right? It would be kind of strange, right? But that's what most people do. It's kind of like network marketing. They pick up and they're trying to get people. That's a big mistake. What you want to do instead is you want to reconnect with these people on a personal level first before we start talking real estate. So we create that list of people, and then we reconnect with them. You can do it. You can automate this. Actually, you can do it through email. You can do an automated email sequence to reconnect with people and break the ice. So that's step number one of this whole process.
Yeah, again, I'm making some notes because that's a really good point, because now you have the group, you have reconnected. Now they're not totally surprised when you bring up a deal. So before we continue, let's take some questions here. So Sahasa, I've been investing with my own money into real estate, asking for money from people. It's really hard, in my opinion. Any tricks you have to get that confidence?
Yeah, wonderful question, Sahas. Thank you for that. Here's the thing, because what I'm hearing is I'm not worthy, right? Or what I'm hearing from that question is kind of like, obviously I don't have the confidence to ask other people for money. So a couple of things. Sahas, you've already been doing deals. If you've been getting yourself a good return on your money, you are ready to start raising capital. Because here's the reality. The average person's returns on their investments are pitiful. I was just talking with one of our clients. He's been talking with the people that are investing their RRSPs with him. On average, they're losing money right now with their RRSPs, having that in the stock market, having that in mutual funds. They're actually going negative, right? So if you've got a good deal, you're doing the other person a massive favor by bringing them on board. You're helping them to do something they cannot do on their own or will not do on their own, and that is to invest in real estate. They're getting the benefit of all of your years of experience, the number of deals, whatever that is, 1, 2, 3, 12, whatever. They're getting the benefit of all of that without having to put in the hard work you've put in. So the second part of that is a mind shift, right? Because quite often at least when I was getting into raising capital, it was all about me, 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 me. I want other people's money to grow my portfolio, to make more money, and I'll pay them something as well. But when we switch our mindset about this and we realize it's us, it's not me, 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 it's a group effort. They're coming on board as our partners, joint venture partners or investor partners. And together we're doing this deal and we're sharing the profits of this deal with that person. It's us in this together. It's not just about me. It's not just about them. It's about us together. So you're doing them a massive favor by getting them into a good real estate deal. Hopefully that helps there, Sahas.
Yeah, again, that totally makes sense. But that brings up another question, Dave. So,
Sure.
which you mentioned, the RRSPs, right? Like, a lot of people that the group you talked about, I know some friends, family, someone, I have, like, my colleagues have RRSPs. So is it really possible to make use of that RSPs to invest with you for JVs?
So I'm not. Yes, it is. Now I'm not an expert on this, but I understand the concept of it. So
Mm-hmm.
as long as I believe it's arm's length,
Mm-hmm.
so probably
Which
won't
means,
work if it's your wife
okay,
or if it's your father or your mother or your brother or your sister. If it's that close, you have
direct
to look into that.
relation.
Right, a family relation, that's probably not going to fly. But if it's arm's length, it's somebody that's not like that, then yes, you can do that. You can use that as an RRSP second mortgage. And we can't really get into the, it's a little bit beyond the scope of our conversation here
Yeah.
to do it today. But yes, it is definitely
Yeah,
possible.
but just in short terms, like so, if you're my friend and I know you, like you have a 300,000 RSP sitting in your account,
Yeah.
making probably like 1-2% or 4%.
Or
Now that I
negative.
offered you 12%, would
Oh
you
my
invest?
gosh. That'd be amazing, right? So what you have to do in general is you have to get your RSP funds out of investors group or whoever you're with and get
Mhm.
it into a self-directed RRSP company, right? So that
Mhm.
you can be in charge of your own funds, and then they'll go through the process. You work with the investor, and then that's how the investor gets access to the funds. And then when they're paying you your return, it goes into your RRSP account. So
Got
it's a
it.
fantastic way for people to
Again,
really leverage their RSPs.
yeah, so to go back to Saha's question, right? Like, how do I confidently ask? So now, when we are giving them that, the potential for giving that kind of returns, so because now you're not only just doing yourself a favor, you're actually doing favor for your
Huge.
friends and family. So you gotta be confident about it. So I love
Yeah,
the points, right? You gotta learn before you jump in.
you definitely. So again, getting back to the process, we've got that target group of people. We've kind of reconnected with them before we even start talking about real
Mhm.
estate. Then the next step is to really start to educate people about what you're doing. And I call this edutain them. A little bit educational, a little bit entertaining, hopefully, right? Because here's the thing, Aditya, most of your people in our sphere are not really interested in real estate investing. Like you are, I am, people that are watching this show are because it's about real estate investing, right? But
Yep.
the average person isn't all that keen. So a big mistake I see people making is they over educate their audience. They give them too much information. It's like a fire hose. So what we want to do is we want to educate them a little bit, hopefully entertain them a little bit, and then always encourage them to reach out to us if they'd like to find out more. So here's the big answer to ask. How do we get the confidence to tell people about what we're up to? It's really easy if we get them coming to us.
Mm.
Does that make sense?
Yep.
It's really easy to talk about your deals if somebody says, "Hey Aditya, what are you doing, man? What's this real estate thing? Tell me about this real estate thing." Then that's an easy conversation to have. Does that make sense?
Yeah, that actually, that's like a, honestly, when I was attending the event, that you have hosted, right? Like, that's one of the biggest reason why I started to be more active, sharing about, things that I do. So thanks to you. But that's very, very good point, guys. So, if you're just joining, I'll just, reiterate what Dave has mentioned so far. Like, if you wants to raise capital for your deals, so before running around and finding the deals, just three steps that Dave so far talked. I'll be very quick again. Go rewatch this video because Dave has like detail. But I'll just recap. Like, create a group of people that your friends, family, colleagues, ex-colleagues, everyone that you already know, like, and trust, and start connecting with them, not just with a deal, but start maybe sending emails, or sending a text, or having a conversation casual, just get to know kind of conversations, get that going. And three, like just they've mentioned, like education plus with some entertainment. So Dave, before you continue further, let's take a couple of questions here. There are questions piled
Sure.
up. So the next question from Siddharth. Sridhar, sorry. Question to Dev and Aditya. Can someone with just a work permit in Canada, invest in real estate with pooled in money from outside Canada? Is there any other additional taxes charged on non-PR folks?
I'm going to say, as far as I understand, yes, they can invest. Well, anybody can invest in real estate in Canada, and where you're getting it from doesn't really matter, as far as I understand. How that works tax wise, I have no idea. I have no experience with that, so I don't want to guess. So you'd have to get the appropriate legal and financial counsel
Yeah.
there.
Yeah, I totally agree with you because tax side is a pretty much a complicated subject. That's why we have accountants who deal with
Exactly.
this stuff. But in short, it's doable. It's there are some things that you need to talk to accountant and professionals. So going on to the next question, let me pull up the next question here. So what's the big difference between realtor and a mortgage broker? I want to be an investor in the long term. Will getting into mortgage benefits more, or being a realtor helps more? Dave, do
Good
you want to
question.
answer that question?
Yeah, I mean, to be an investor, you don't need to be either one of those. Aditya, I'm sure you work with tons of real estate investors who are not realtors,
Yeah.
they're not mortgage brokers, they're plumbers, doctors, truck drivers, whatever, or full time real estate entrepreneurs, right? So, uh, Prattville, you don't need to do that. Now, Aditya did, and that's worked really well for him being a realtor. But no, you don't need to do either one of those. It's a matter of it's really important to get those good people on your team that are doing those activities. You don't have to become one of those people.
Yeah, I totally agree. And only reason I got in because I was not into IT, and I was more passionate about, like, I want to replace my active income with some other active income that I enjoy more. So for me, it was real estate sales. But again, because at the end, don't forget, like, if you want to make another career, another active career, where you want to excel, yeah, both mortgage and the realtor career, both of them are sales careers, both of them have a great opportunity, and knowledge in both the areas will definitely help you for investing purpose. But like Dave mentioned, you don't really need to have any of them in order to be a really successful investor. Maybe actually I would say, like, not having a license will help you even more. Sometimes I feel like I can do more investing, but just because I have this license, I'm like,
You always have to disclose, right? You always have
yeah,
to tell somebody that you're a realtor, and when you're approaching for sale by owners, they always think that you're trying to get a listing for their house instead of just trying to buy it. So, it can be a handicap in certain ways if that's not already your natural inclination. If you're passionate about finance, then yeah, look at becoming
yeah,
a mortgage broker. If you're passionate about sales and helping people buy and sell properties, then yeah, look at becoming a realtor. Is it necessary for becoming a successful real estate investor? Absolutely not. Yeah. So in fact, it might be a distraction. So
yeah,
if you're doing well at your current profession, and you're keeping the lights on, you're paying the bills, then just keep doing that, and then do the real estate on the side until you've built up enough passive income from that you can quit your job.
yeah. That's exactly what I would do.
Right.
So again, let's take another question. Moving on to continue your topic, because I'm more curious to learn on the process. But
Yeah.
I want to make sure people. If you're just joining, please don't hesitate to ask more questions. Especially, this is the time when we have an expert in raising capital. So try to focus your questions regarding capital. If other questions, again, feel free to leave. But I would love to answer those questions in the next session, because now let's get the best from the expert on the topic. So Mohammed, hi Aditya, could you please tell us more about starting investing in real estate in Canada as a student who got his first job under work permit? um, Dave, do you want to jump on this question?
No, I have no
Okay, so
no input.
you know what? I know exactly what he's talking, because that's exactly when I started my investing. So, Mohammed, if I were you and I was in your position when I got into real estate investing, I got my primary home, and it's a house hacking, 2 units, lived in 1 unit, and when I have my work permit, when I had full time job, the bank actually lended me, for 95% on the mortgage. So like on the purchase price of the property, I had to come up with 5% down because it's my primary home. So I would suggest look into those house hacking concept, look into buying your primary home, because that will help you to learn a lot. And like Dave mentioned it earlier, because the first deal, if the first and second deal, or at least the first deal, if it's yours personal one, you will learn things a lot more easy, because and especially if you don't own anything, getting into buying a primary home is not that hard, and you don't need that much money, especially if you're in a decent sized city where your prices are not that crazy like Toronto.
Good
So,
point.
Dave, sorry, I would love to you to continue with the topic.
Sure, for sure. So I don't quite remember where we left off. Oh yeah, we were talking about the
Education with some entertainment.
edutaining marketing, right? So we've got our target group of people. We've broken the ice with them. We're starting to get the marketing going out. It's edutaining marketing. So different examples of this would be video logs, could be electronic newsletters or e-zines, could be blog posts. So ideally, once a week, drip, 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 you're communicating with those people on your list with a little bit of edutainment, right? And then at the end of each piece of that, it's always a call to action. Hey, if you'd like to find out more, click on the link below, book a call, let's have a conversation, see if this is a good fit for you. So DJ, you're kind of doing a version of this with your weekly YouTube lives, right? On a much massive kind of scale. So you can do this on a mini scale with different things like those video logs, blog posts, electronic newsletters.
Reels, posts.
Yeah, exactly. Now you got to be a little bit careful with the social media side of things, because again, that's a public platform. So you'd want to make sure that nothing that you do can be construed as soliciting investors, because that can get you in big trouble with the Securities Commission. So avoid that at all costs. I know we see lots of people doing it and they get away with it until they don't. And then it's a very, very painful, expensive lesson they're going to get.
Yep, love it. So call to action, and what do we next?
Yeah, then we got to be ready to go when somebody puts up their hand and says, hey, Aditya, tell me about your deal. You don't want to get caught like a deer in the headlights. So you want to make sure that you've got a really good presentation that you can walk people through. So I suggest something like a slideshow, PowerPoint, Keynote, whatever you use there, something that you can walk people through and explains it at a very easy to understand level. So here's the challenge. Once you've got some education, you've read some books about real estate, you've done a deal maybe, or you've been going to real estate investment clubs, chances are you're going to know a lot of terminology. You're going to know a lot of jargon. You have to be careful not to use that too much in your marketing or in your presentation, because you have to assume that the other person you're talking to doesn't understand anything about real estate investing. So a good rule of thumb is to create everything as if the person you're talking to is an average 13-year-old kid. If you have it at that level, then it's really easy to understand, and it's going to be a lot easier for you to raise capital because you've simplified things a lot. Does that make sense, Aditya?
Yeah, it totally makes sense, because if I'm like a newbie, like have no clue, and if you're talking about like Burr or whatever
talking
the
about IRRs and
terminology.
ROIs and all this kind of stuff.
Yeah, I'm like, you already lost me. Like, bro, get to the point. What are you telling me? What is in it for me?
Well, yeah, here's the thing. Here's what's going to happen. The other person's going to feel confused, and they're going to feel kind of dumb, and nobody ever wants to admit that they're confused or dumb. So they're just going to shut down, and they're going to say, internally, they're going to say, no thanks, right? I don't get it, right? So it's really, really important to simplify it. And I think, again, this is another massive value that you're providing with this YouTube channel, my friend, is that you are simplifying things because you're remembering what it was like for you when you first started, right? So you've got a whole new thing that they're focusing on, new country, different language, the whole bit, right? So you have to remember back to those days, and we need to make sure that we keep it simple.
Yeah, love it. So the next question from Michelle. Hello, Dave and Aditya. When multiple people invest in a deal, what kind of contracts are signed? How is the property ownership decided? Great questions.
Yeah, that's a great question there, Michelle. It kind of depends. So it depends on how big of a deal it is. So if you're getting into really large multifamily type properties, apartment buildings, then chances are you might be doing something like a syndication or a whole separate corporate structure, something like that. If you're doing a smaller deal like a single family home, then I would suggest you do a joint venture agreement, and you're going to have to get a good real estate lawyer to put something together for you to make that valid in your area. So a joint venture agreement would probably be good for something like a single family home or a fourplex or something like that, a smaller type property. And then once you're getting into much bigger deals, you might get people together within a corporation to buy that property, or you might do a kind of a syndication kind of a deal. In any case, you're definitely going to need to talk with a real estate lawyer about setting up the proper uh,
And
paperwork.
another question that she has, like, property ownership decided,
Yeah.
right? Like, who is the property ownership? Like, generally, when I'm bringing in a JV partner, if I'm an active partner, is it like, do we both share the title of the property, or would you suggest just have the JV partner on the title? Any
Yeah, it
comments
really
on that?
depends on where you're at with qualifying for financing, right? So
Mhm.
wherever possible, it's probably a good idea to have you on title. Although back in the day when I was working with the joint venture partners doing single family homes, it got to the point where it was just much easier to only have the joint venture partner on title on the property. And then the way I secured my interest in the property was with a joint venture agreement registered on title. So kind of attached as a caveat, that's what it's called in my neck of the woods, to that property. So there's all sorts of different ways that you can do it. It depends on what kind of deals you're doing and how many investors are involved.
Yep, and also like the mortgages, right? Like if you are going on to the title, probably if you have already other more properties,
You,
getting a
you might
mortgage.
not be qualifying for that mortgage, right? You might
Yes,
won't qualify for it, right?
you got to look into what situation you're in. So Michelle, if possible, try to, like, if you're going through any specific situation right now, maybe ask a specific question, so that way Dave can answer it even more specific, like could help you directly. Um, Going on to the next question here. What are the disputes or what are the disputes are settled in JV?
Yeah. How do we settle this? What happens if you don't get along with your joint venture partner after a while?
That's
That's a
good.
really good question, Rana. Um, so that's part of the importance of having a really good real estate lawyer help you with your joint venture agreement is you want to anticipate worst case scenarios. Like what happens if, heaven forbid, you as the working partner, if you get hit by a bus and you're done, you're dead. Like what happens there? What happens to the deal? What happens if your joint venture partner, heaven forbid, gets a divorce and needs to exit from the deal? What happens then? So there's all sorts of different ways to settle the disputes in a joint venture. Things like a shotgun clause where either party can have the first opportunity to buy out the other party of that deal, or perhaps it's okay, if we can't get along, then we're going to have to liquidate the property and go our separate ways that way. So again, that's why it's really important that you kind of think these things through for yourself and talk with a good real estate lawyer as well, and say what are some of the typical situations where you see things going wrong with joint venture agreements, and how can we anticipate those things in a good joint venture agreement.
Yeah, that's very, very, very important. That's why, like, I agree with you, Jib, because that's one thing I learned from my first deal, that I was actually the money partner,
Yeah.
and it went sideways. And thank God, like, I had a lawyer, because I learned from you guys. you know had to have that JV agreement, like, we had an option to get out, and settle the issue, because we
Yeah.
have.
So how did, if you don't mind sharing, how did you do that? Aditya?
So again, same thing. I sit down with the lawyer, and he asked, okay, what happens in this situation? Like, because the lawyer
So
saw it.
this was before you got into the deal, correct? This was when you were working
Yeah,
on the
yeah.
joint venture
So
agreement.
before we purchased the property, we are three people. One active partner who was the builder, and me, another guy was a money partners. So we asked our lawyer to draft a JV agreement, and trust me, you won't believe, I had the some of the copies that I got from you from your event. I had those some terms, like I raised for the lawyer, and he had his terms, and we discussed multiple times, like, okay, if this happens, we do this. If this happens, we do this. Because there is always one of the biggest concern is, like, one partner wants to get out
Yeah.
because he has some family emergency, or the other partner wants to, like, totally exit the project, or the other partner wants to refinance, or it's so many things can come up, because it's life. We all know life will throw curveballs at us. And same, that's exactly what happened in the beginning. Like, one of my other money partner said, i I don't want to be here, like, I want to get out. And then I thought, okay, can I really buy this? Because the first option we put in is, like, again, that's something you can talk to your lawyer and come up with the right one. But what I did was, like, I said, okay, if one of the partner wants to exit, the first option before we sell it out, we have to evaluate the property value, and whatever the market value on that day, the other partner should have the, like, other partners or partner, whoever, like, there are multiple people, get the first chance to say no to buy it.
Mhm. Right.
So again, that helped, like, and both of us decided to sell. Then major shareholders, if majority votes are towards selling it, then we'll sell it.
Right. Right. And then, hopefully you're able to recuperate, but your cost. But if not, maybe you take a little bit of a loss in that situation. Not that that's going to happen these days very much, but yeah. So again, it's kind of like a marriage. You almost have to have a prenuptial agreement getting into it, right? So it's not very much fun, but you need to sit down with your partners and say, okay, we're in the honeymoon phase right now, but let's fast forward a few years. What happens if somebody needs to get out, somebody wants to get out, we don't get along anymore, we don't agree on what's going on. But bottom line is always a good idea that one person is uh, in charge of the deal. So I don't really like the idea of a 50-50 split. I'd always prefer that it's at least 51-49 so that you've got the controlling vote in the deal.
I
Okay.
learned that hard way.
Yeah. Well,
Yeah,
it's
that's
it's
very, very, very solid advice. I love it, because if you're an active partner, if you want to have control over the deal, that 51 helps you.
yeah.
Thank you, Dave. So going on to the next question, what is your opinion on real estate ETFs instead of direct investing in real estate? Great question.
Yeah, she's been doing her homework. Yeah. My opinion is they're a good option. Your funds are going to be definitely diluted with a lot of other people's funds. So basically, uh, it's kind of like investing in a mutual fund, but based on real estate. So that's great. You can get in with a lot less money, but because it's diluted, you're going to get much lower returns on your money, and you're going to have absolutely no control over really what you're investing in or what they're doing with the asset. On the other hand, if you partner with somebody directly, there is potentially more risk because you've got all of your eggs in that one basket. However, the rewards can be much higher as well. So instead of getting, whatever it is, 7 or 8% or 9%, whatever it is with an ETF, perhaps you're getting 25, 30, 35% when you look at all of the different profit centers that you can get from that real estate deal with doing that direct deal with an investor partner. So it really depends on your level of comfort and your risk tolerance level as well.
Yeah, I'll add another point to it. If you're doing a JV, one of the another advantage, again, I totally agree with you. There is high risk and high reward. Also, like, you can pick and choose the deals, right? That's another thing. Like, if you already have a knowledge about real estate, because if you know how to vet a deal, how to vet the partner. If the partner has a solid experience and the deal is solid, now you have at least your comfort zone gets a little bit more, because that, whereas ETFs you cannot control that much, but because the company has a long reputation or whatever, you have like a steady stream of returns. So yeah, both have their own advantages.
Yeah. So ETF's just a much more conservative way to get involved in real estate. Yep.
Yep. Moving on to the next question. So, Samba Siva, I have a withdrawn RSP of 35K to buy my primary residency. Will it be worth if I contribute this 35K back to RSP account for next 15 years? Sorry, will it be worth if I contribute back? Yeah.
I would say yes, unless you've got something better to do with it, right? So what we were talking about before, if you just do the normal thing with your RSPs and put them into mutual funds, I'm not a big fan of that. However, if you took those mutual funds and you turned that into if you took your RSPs and turned them into a self-directed RSP, and you use that money to invest with somebody in, let's say, a second mortgage or a bridge loan or something to do with real estate, where instead of getting 1 or 2%, now you're getting 8, 10, 12% on your money, then that's a much smarter way to do it. Now, the challenge is, if it's going to take you 15 years to build up $35,000 in your RSPs, you can't really do much with 1,000 here, 2,000 there, right? You got to, probably the rock bottom minimum would be $10,000 at absolute minimum that you could be using to loan to somebody for anything to do with real estate. And that would be for a very small portion of a rehab or something like that. But
Yeah. And I'll add another, because Samashiv bring up a really good point, like using RRSPs for their first down payment. So someone was asking, like, how do I get started investing? If you have RRSP and if you have already contributed like 20, 30,000, like 35,000, like Sam, it's like fantastic. You can literally use that RRSP. So you already took the tax advantage and you took that money back and used as a 5% down for your primary home. There you go. If you have a good job, or if you have like income from last 2 years or 3 years, now if you qualify for a mortgage and you can use this money, so that's one of the best way to start in real estate. So
well, especially if you do it the way you did it, Aditya, which is you bought a duplex, it sounds like, right?
Yeah.
Then that's absolutely brilliant, because now you've used your RSPs to buy your first investment property, because you're house hacking, you're getting a double whammy. So do that.
Wow. Yeah, the whole combination is like even more awesome, right? So love it, love it. All the dots are connecting.
Yeah.
So moving on to the next question, what do you think about the boom Calgary market? I have no clue. Do you want to talk about it, Dave?
What do I think about the boom Calgary market? I think many markets in Canada right now are kind of in a boom. I think as far as big markets go, Calgary is probably one of the most affordable ones right now. However, Calgary is, as Alberta is, it's very dependent on oil and gas right now. So with gas being oil being the price it is right now, yeah, awesome. When it's not so awesome. So again, it's not a super steady Eddie kind of a market, but that's my impression.
So this is another question that I was expecting to hear from people. So what can we expect? Can we expect a market correction soon in terms of pricing, especially for GTA? What do you think? I love to pick your brain on this one.
Yeah, you know what? I'm not even going to go there, because my crystal ball is so foggy. Here's what happened. Aditya, do you remember at the beginning of the pandemic?
Mhm.
You remember the beginning of that? It happened, and I put together a group of, I can't remember, it was 17 or
Zoom call, yes.
Yeah, 17 or 18 Canadian real estate experts. We got on there and we did the COVID crisis plan, is what it was, right? And I asked everybody, what are your thoughts on what's going to happen to the real estate market? And every single person except for one guy got it wrong. We all predicted doom and gloom that, we're going in this lockdown. Everybody's going to lose their jobs. Nobody's going to be buying property. Nobody's going to have any money. We're going to go into a massive recession, yada, yada, all this kind of stuff. What happened? Things went flat for a little bit, and then poof, they went crazy. Every single person except for Stefan Arnio was wrong. Stefan Arnio, rest his soul, he died a few months after that. He predicted pretty much what happened. Absolutely, but everybody else, myself included, was wrong. So I'm not doing any more predictions.
I love the answer because I remember that discussion on Zoom. And I have attended so many events at that time, like, just to understand like the virtual events, because, hey, what's happening? Like, is it going to be everything going to crash? Because people start to lose jobs already at that time.
Yeah.
And it totally
scary.
Quite opposite. No idea how it happened. Like, that's one thing, even like big investors like Warren Buffett, even they're like saying, oh, I don't know what else to say because we don't know what to predict. It's so much noise out there. It's so much like, unclear.
And you have to be careful. Like the people quite often who we look at as experts are wrong. Quite often. I remember way back in 2007, 2008, when we went through, the Bear Stearns thing in the States and all that kind of stuff happened. At that time, we were doing an event and we had Robert Kiyosaki, Rich Dad, Poor Dad there. And we said, hey, what do you think is going to happen? And he was in a panic at that time. He said, hey, the 3 G's, go out and buy guns, gold, and grub, food. Guns, gold, and grub. It's going to turn into the zombie apocalypse. And we're all like this. He was dead wrong. He was wrong. Like, was it a major adjustment? Was there? Yes, but did the world end? No, it didn't. Now, I'm not saying anything. I'm not knocking Robert Kiyosaki. He's a very intelligent, very connected guy, but he got it wrong, right? So, I'm not doing predictions. Yeah. Even a stopped clock is right twice a day, right?
Yeah. So instead, what would you suggest there? Because, hey, so many people, this is a common question I get, especially because of this so much unclear about the market situation.
Yeah.
What would you suggest, like people to wait or, find the right deals and buy? Or,
you know what? It really depends on what your strategy is. If you are in real estate for the long term, then I think the good old don't wait to buy real estate and wait is applicable. I mean, we don't know what's going to happen with the market, but I imagine most of your followers are in and around Ontario, correct, Aditya?
Yeah.
So here's the reality. Canada is a very, very popular country that literally billions of people would love to come live here.
Yeah.
Right? You know this firsthand, my friend, right?
Yeah.
And many, it sounds like many of your followers, right? That's the thing. So the demand to come to Canada is huge. We're letting in lots of immigrants into the country because we don't have enough babies getting born here to keep up with stuff. So we've got this mass influx of new people coming into the country. And I don't remember exactly what the statistics are, but I think it's
400,000 plus a year right
and
now.
of those 400,000 a year, I think 70% of them stay in Ontario. Right? So get back to the fundamentals. Look at the market fundamentals. Do you have job growth? Do you have in-migration? Do you have more people coming in than leaving? All of these kind of things. So again, GTA has been on an upward trend for a heck of a long time. Is there a chance that it can correct? Yeah, real estate's cyclical, but the other side of the coin is money's cheap. We're so many people, we've gotten so spoiled with these really, really low interest rates. I remember my mom back in the 1980s, she did some real estate investing. Interest rates went up to 19, 20, 21% back then. All right. So we got very, very cheap money still. If you can, I think if you're in the right market, it's if you're in it for the long game, Don't wait. Buy the real estate and then wait, right?
Again, we are not financial advisors or anything. Just we are random people on YouTube giving our
Any
opinions.
opinions?
Yep.
Yeah, exactly.
Just a disclaimer, guys.
Big disclaimer. Yeah.
So, Dave, I know you're super busy. It's already 8. I would just take maybe one or two more questions, and we'll call it tonight, because I don't want to keep you here free. And where can people find you? Because I know you have a wealth of knowledge, and you host a lot of events. Where is the best place people can find you?
Yeah. Well, if you want to find out more about me and what we do, moneypartnerformula.com.
.com. Yeah,
Moneypartnerformula.com.
it's also in the comments, guys.
Yeah. And you can grab a free copy of my book in exchange for your name and your email address. You get a PDF copy of that, and you can find out all about the.
Yeah, I would strongly suggest, guys, go follow Dave here, and
Thanks.
get that free copy, because trust me, I still have those copies, and very, very, very useful information, especially if you want to go buy more cash flow properties, raise more money.
Thanks, my friend. I
So
appreciate it.
it's in the comments. The website link is in the comments, guys. So don't hesitate to get there. It's for free anyway. So
Price
and
is right.
by the way, Dave has a great podcast. I loved hearing. I hear very often in my car with a great guest. So I'm pretty sure you have the link in your website, Dave.
We do. Yeah. You can
Okay,
click on the
perfect. So
podcast.
check out the podcast too. That's my favorite one. I
Thank you.
love to, because he has all the lot of Canadian guests, because that's a very important thing. You want to keep learning, so that when you're educated, you can make better decisions. So go jump on those podcasts on a regular basis. Let's take one or two more questions, Dave, and we'll call it tonight. So here, Srikar, I'm based out of Vancouver, so your guy, and planning for the first property. Is it recommended to buy in smaller cities or main cities for first home?
Oh, that's a good question, Srikar. It depends on what you want to do. So again, if you're getting into you want to buy your first property, if you live in Vancouver, if you have the ability to do exactly what Aditya did and get into your own first property and house hack it, so that you've got a single family home with a suite or something like that, I would probably recommend that if you can do it, because otherwise, if you're buying in a small city that's quite a ways away from Vancouver, then you've got, yes, it's cheaper, much cheaper, but then you've got management issues to be thinking of. Then you've got long distance property management to be looking at. And then you've got a whole range of issues that come with that. Plus, depending on the town, it might be very, very unstable. So the market might be a lot more cyclical than it is in larger cities. So hopefully that helps.
Yeah, and I'll just add a quick point to it. If for some reason, if you're in a bigger city like Vancouver itself or GTA, where if you cannot afford, like if you cannot qualify for the mortgage, and if you're working from home, then that's an option. Like look for the secondary cities where still there is a lot of job growth, population growth, fundamentals are good. Maybe if you can go move there, because you can still qualify for buying a primary home for 5% down, because now you have a work from home option. That's what I have seen. Like a lot of our clients are, moving from Toronto to Windsor, because they still can, if they
can
have
buy
to.
something.
Yeah, exactly. And the population growth is there. So there are definitely cities around Vancouver, likewise, like Windsor, where population growth is happening and the job growth is happening, and the whole fundamentals are happening. So that's another option too. Final question for the night, and we'll call it guys. If you liked it, how did you like this whole interview and the knowledge sharing from experts? So let us know in the comments, and please share some love for Dave. Make sure go follow, check his podcast, check his website. So last question for the night here. Someone asking, how do I check current property value?
Well, you'd be the guy to answer that one, my friend. You've got
Okay,
your
so
finger on the pulse.
simple answer. If you are like, if you have a realtor friend, right, who helped you, that's the first place I would go. Hey, call your realtor because they always love to give you an estimation. If you're our client, if you're in and around Windsor, you even if you're not selling or not doing any transaction for now, because we always tell our clients, hey, if you want to refinance, if you need to know what's your property value, just call us. We will give you the estimation. That's the best way. That's why, like Dave said, any city that you're investing, make some investor focused realtor friends. And the second option is like, you can pay $300-400 for an appraisal company, because there are a lot of appraisal companies in the city. They can give you appraisal, come and do the appraisal value. Or the other option is like, you just want to blindly spot some property sold in your area,
Yeah,
just
do some comps.
yeah, comps, and just call your mortgage person, say, hey, my property appraised by this price, I saw my neighbor appraise it. They might do it for you. But that's a bluff. So go for the first option and second option if possible. So, guys, with that, thank you so much, Dave. I really appreciate for your time. I know this is very valuable, not only just for my audience and for me as well, because I took all the notes. I don't know if you guys took, so I would suggest go rewatch it, take the suggestions, and again, people who have the knowledge is not the one going to win in this market. People who have the knowledge and act on those knowledge. So whatever you learn from this, go act on it, and share with us. Come, tag us if you did something, if you created a group or if you connected with your clients. Just tag us or give us a shout. So with that, thank you so much, Dave. Have a good night.
Thanks, everybody. Take care.
Good night, guys. So please don't forget to subscribe, like, comment. See you guys on the next live, same time, 7 p.m.
Bye bye.
Bye bye.